Evening, everybody. Welcome in our today's webinar on FEMA, and our renowned faculty, CA Naren Madlani ji is here. Before that, I want you to put your right hand on your heart for our institute motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, Ms. Raji. And I myself, see Pinky Kedia, Vikasa chairperson for the financial year for this year 23-24. And I want to recognize the presence of our treasurer, CA Ketan Sayya, also there. And we have our energetic and techno-savvy chairman, CA Arpit Jagdish Kabra, with us. And may I request Arpit to share some thoughts and what you want to do in this year, what your policy, please.
Before I could speak, this is for the first time we are addressing as the new council. I would request, I also have with me wonderful colleagues of mine, Saurabh and Ketan. So Ketan bhai, if you could first share your thoughts as a treasurer, and then we would, go ahead.
Thank you, Chairman, sir. Good evening to one and everybody. I think, wonderful initiative by the International Tax and FEMA Committee. And this evening, I think we have, worthy speaker Naren ji on this app topic. There have been so many transactions happening across for non-residents, and people are not aware of implication, beginning with, changing in their bank account. If they have a saving account, they go abroad, but they don't change it to NRO, NRE. A lot of time people from out of India are coming here for working on projects, and they are also supposed to file return for their Indian income, but they don't file. So I think these type of, seminar on basics of FEMA, international tax and intricacies which are happening, and then people receiving notices and responding. I think pre-hand, if we learn like this, that's going to be a wonderful evening. With this, once again, welcome to one and all. Thank you so much. And Arpit, thank you for giving this opportunity. Over to you.
All right, thank you very much. And friends, I think congratulations, Pinky Madam, for arranging a very apt seminar. This virtual conference, virtual meeting on, very, very delicate subject of understanding investments and various permissible investments by NRIs. I think if, as all of you would have already known by this, something that we are already aware of, that, various investments that can be done. So they can all come in, say, deposit, stocks, mutual funds, debentures. But very importantly, there are certain restrictions and regulations when they have to invest in India. For example, they are also eligible to invest in NPS. Not many people know, but they cannot do it in a PPF account. But if they have an existing account, they could do it till maturity. And lot many, and real estate, of course, everyone is aware of. So I think all of these things become very relevant. And when we really, as a chartered accountant, if we have to advise, if we have to really reach out, we need exact, strong technical support. And in that, I think Naren Madlani ji, today's faculty, would do justice to this entire program. So I think thank you, Naren sir, for accepting our invitation. Okay. Before we could go ahead with the program, since this is our first address, to all the participants here, thank you very much for believing in us and trusting in us and giving us this huge responsibility to occupy the apex position in the WRC Council. As a chairman, this year, along with my council, Secretary Saurabh Ajmera, who is besides me, and in true sense, will always be together since it's an important year for both of us. My treasurer, Ketan Bhai, and a very, very, very talented Vikasa chairperson, also the chairperson for a young and women empowerment committee, see Pinky Kedia, madam. Vice Chairman Hitesh Pomal sir, who's from Ahmedabad. The President, Honorable President Aniket Talati, is also from Ahmedabad, that is from the West. So I think this year is going to be a year full of action, full of lot of maybe changes, amendments, because the next year is going to be the general elections as well. So yes, we are all ready, we are all abreast. This year, ICI would be entering its 75th year of its legacy. As a regulator, the oldest one and the strongest one in the economy today, I think it's a moment of pride for each one of us. And therefore, that is the theme that we have taken this year. As you can see on your screens, the P stands for perform, which we all do. But I think now it's more a chance as we enter into the 75th year of our existence. We have to stand up and perform, relearn, because everything is undergoing dynamic change. So that is why we have purposefully kept, let's relearn things with a refreshing things. As you can see in the logo, is centric. Everything that we do is centric to the innovations. And therefore, that is what we'll do at WRC also. So we are coming out with the many of the firsts that we did. D is distinguish. Let us all, by virtue of the programs that we do, with the availability of faculties, experts like Naren, Madlani ji, and many others, I think let us all try and distinguish ourselves from the normal that we've been already doing. That is the theme, that is one of the main focus area, that how as a chartered accountant we could distinguish ourselves in whatever field that we are in. And E is finally the enrichment. While doing all of this, one of the biggest responsibilities we as chartered accountants have is how do we enrich? How do we enrich the ecosystem? How do we enrich this planet? Because with ESG around the corner, opportunities in ESG are brilliant. We want to make sure that we talk about it, we see about it, and we therefore imbibe in all of the activities that we do. How do we enrich our ecosystem? How do we value add? And how do we take care of this beautiful planet, Earth, and our nature as well? So that's the thought process that we are carrying this year. A young team, in fact, young in terms of we both, a very experienced team with Ketan Bhai and Hitesh Bhai also. It's going to be a great combination. Look forward to each one of your suggestions. And should you have any feedback, should you have any suggestions, please feel free to reach out to us. More than happy to consider it and put it into action. Thank you very much. Over to Pinky madam.
Thank you, Arpit ji, to share your thoughts about perform, relearn, innovate, and we will perform the function with your guidance. We will try to do this with our team. And if Saurabh want to say anything, Saurabh?
Ma'am, I just want to say a big compliment to you. And this is the one area where we all are as a member feeling this is the gray area for our practice. So we have to do more and more programs related to FEMA, because in every time whenever we are doing any activity in which foreign director is a member or they want to invest in a company, lots of question is there, how they can invest and what kind of formality they have to do with RBI. So this is really a great program which you have organized. My compliment to you and thanks to our faculty, Naren sir. Over to you, ma'am.
Thank you, Saurabh. I want to thank you. Thanks, CA Naren sir. Actually, his office is in my building, office building, and he is taking the lecture on this subject. And this subject is very familiar for him. He is doing practice in FEMA only, and when in our practice, we are facing this type of question with us from our client, Ki madam, if I am NRI and I want to invest in India, in which field we can invest, and what is the FEMA guideline, what is the RBI guideline, what is the income tax guideline. So I thought this will be the appropriate subject right now with before 31st March, if they want to do anything. So without wasting more time, I want to request CA Rahul Daga to formally introduce our today's speaker. Rahul, please.
Good evening, everyone. It gives me immense pleasure to introduce our today's faculty, CA Naren Madlani ji. He's practicing in the field of FEMA and international taxation since last 2 decades. He's successfully guided hundreds of clients on transaction structuring from income tax, international tax, and FEMA consulting vantage point. He's also provided guidance on matters of GAR and POEM to multiple thriving entities which are set up operations abroad via the ODI route. He's been a co-convener of the FEMA Study Circle of the Bombay Chartered Accountants Society from 2007 to 2010. He's a group leader and speaker at various forums at BCAS, Study Circle, WIRC, covering various topics on FEMA and international taxation. He's also the speaker at the Institute of the Company Secretaries of India. He's co-authored the book on FEMA called The Referencer on FEMA, published by the ICAI in year 2005. And also he's also co-authored the revised edition to it in 2010. With this brief introduction, I would like to I'd like to welcome our today's faculty with a round of applause. Over to you, sir.
Yeah, thank you, Rahul. CA Naren sir, now dais is yours. You can continue. Yes.
Yeah, one second. Yeah, so at the outset, I'm thankful to Pinky Madam, WRC, Arpit ji, Kachan ji, and all the entire team for giving me the opportunity to present before you the subject of the day. Before 10 days, we had taken the same subject in our building. We have got a study circle, famous study circle in our building. A number of chartered accountants in the building. So Pinky Madam asked me, and I said, okay, it is not new for me. Okay, so shall we start the subject now directly? Yeah. See, first I will explain you this chart. If NRI or OCI wants to invest in India, they've got 2 options: equity instrument and debt instrument. Those who want their money to be fully secured, they will go for the debt instrument, and those who are little bit want to take little bit risk, they will go for the equity investment. Okay. Again, in equity, there are 2 bifurcations: repatriation and non-repatriation basis. Everybody is aware of. There is no need to explain the word repatriation, non-repatriation. Repatriation means original investment which comes to India from abroad can be repatriated outside India at any time when the investor exits from the India. And non-repatriation means otherwise. Whatever is the investment by the non-resident which remains in India, and at the time of exit, such investment is to be a principal amount is to be deposited in NRO account. Okay. Again, under repatriation, there are 3 parts. First one is Schedule 1, second one is Schedule 3, and third one is Schedule 6. First one is FDI, second one is portfolio investment, and third one is investment in the capital of LLP. Now, let me first try to explain the concept FDI and portfolio investment. When non-resident wants to invest in India on repatriation basis, in Indian company with the intention to do the business, such investment is classified as foreign direct investment. Here the intention is to do the business, and that is why investing in Indian company. Portfolio investment means acquiring shares from the stock market and selling it and getting the difference between the purchase and sale price. That is capital gain. That is the intention. There the intention is not to do the business. So that is portfolio. This is called strategic investment. This one is portfolio investment. And last one is Schedule 4. That is investment in LLP, capital investment in LLP on repatriation basis. Okay. Other side, if you go, then it is on non-repatriation basis. So if the NRI or OCI who wants to invest in India doesn't have any source of income outside India, they've got some sufficient fund in NRO account, then they can invest under non-repatriation basis under Schedule 4. Again, under Schedule 4, there are two parts: equity investment, units of mutual fund, which has got more than 50% investment in equity market, convertible notes, and capital contribution in LLP. And other side is proprietorship and partnership. So non-resident can invest in India two ways: repatriation and non-repatriation. Okay. On non-repatriation, he has got option either to go for the proprietorship, partnership, or to invest in the stock market. That is equity investment, units of mutual fund, convertible notes, notes in startups, and capital contribution in LLP. If you see, LLP investment is there in both the part. In India from NRO account, so he can invest on non-repatriation basis under Schedule 4. And if he wants to invest on repatriation basis, then you have to go on a repatriation basis, Schedule 6. Okay. And another part is the debt instrument. We have covered debt instrument in the next slide. Again, in debt instrument also, there are two parts: repatriation and non-repatriation. I have given the list of the debt instrument where we can invest on repatriation basis and on the non-repatriation basis. For example, somebody invests in the preferences or debentures of Indian company. Okay, then he has got the option to invest on repatriation basis or non-repatriation basis. Okay, if debentures or preferences which are issued by the Indian company is fully and mandatory convertible into equity, such instrument is considered as an equity instrument and not as a debt instrument. So here what we are referring to, debentures and preferences, are one which are not fully and mandatory convertible, which are redeemable, like that. And such investment is possible in both the routes: non-repatriation, repatriation. Government securities also permitted, bonds issued by the PSU is also permitted, and other debt instrument issued by the bank is also permitted. So these are the two lists which are the permissible investment in debt instrument by the non-resident, repatriation as well as non-repatriation basis. Now, if somebody wants to invest in debt instruments on repatriation basis, then first he will have to register with a particular bank, a designated bank, as a PIS, portfolio investment scheme. Only then he can do the transaction of investment in debt on repatriation basis. If he doesn't want to go for such formality, then the other option is to invest without registration on non-repatriation basis. So second side is on the non-repatriation basis. Yeah, one thing I want to explain is, see, generally most of the chartered accountants who are not into the practice of the FEMA, they treat NRI as a non-resident. But see, non-resident is totally different. NRI is different. Non-resident means person who is a NRI, OCI, non-NRI, foreign, non-NRI, foreign citizen, foreign company, foreign LLP, foreign LLC, partners, foreign partnership firm, proprietorship firm, or any other entity incorporated outside India. So that is non-resident. Non-resident covers NRI, OCI, and apart from NRI, OCI, it also covers all foreign entities, even absolute foreigners who are not of Indian origin. They can also fall under the category of non-resident. Okay. And next one is NRI. NRI means we have given two terms: non-resident Indians and overseas citizen of India. NRI means person who are residing outside India, but they are holding Indian passport. For example, somebody goes to Gulf countries and stays there for 20 years, 30 years, 40 years. Then also their status is, they are considered as non-resident Indians because they have Indian passport. The Gulf country doesn't give passport to any foreigners. So they are holding Indian passport, and such persons who are holding Indian passport, but practically they are residing outside India, such persons are categorized as non-resident Indians. And OCI, there is no much difference between NRI and OCI, but the definition is like this: OCI means the person who doesn't hold Indian passport is also residing abroad. NRI is also residing abroad. That is common factor in both of them. But in case of NRI, they are holding Indian passport. In case of OCI, they are holding foreign passport. They don't hold Indian passport. But secondly, they have to get registered under Section 7A of Indian Citizenship Act 1955 as a OCI card holder. To have a legal status, they have to register under this act as a OCI and they issue OCI card. Okay. Earlier, prior to this was recently introduced before 6-7 years. Prior to this, the concept was PIO, person of Indian origin, and there was no requirement of any registration or anything for the PIO. But now most of the notifications under FEMA, the concept of PIO is removed except NRO NRE account. Rest of the notification use the concept OCI, and for OCI, somebody wants to buy property in India, non-resident wants to buy property in India, they can buy, but they are supposed to hold OCI card or they should be NRI, means Indian residents residing abroad holding Indian passport. And second benefit of the OCI card is some non-resident who is staying abroad and he has got some business in India and frequently traveling to India. So whenever he comes to India, he requires Indian visa. But if he is holding OCI card, then he does not require visa to be obtained from the Indian government. He can directly, anytime he can directly come to India. That is the second benefit of the OCI card. Now, the two important accounts, nobody, generally chartered accountants are generally aware of the fact that these are the two non-resident accounts. What is the exact line of demarcation between the two? NRO account is similar to that of our SB account. Okay. The fund lying in NRO is not repatriable. So some non-resident has got income in India. Suppose he has got some rent or interest or dividend or any income in India. He doing some business, proprietorship, partnership on non-repatriation basis, and he is earning some income. So such income he has to park in NRO account. He cannot take away outside India. So whatever fund is lying in NRO account can be used for the Indian expenses, for Indian investment, etc. But such fund cannot be repatriated outside India under normal circumstances. But government has issued a scheme for last 10-12 years of 1 million scheme. The person who is a non-resident has got a NRO account, which is fund lying in NRO account is not repatriable, but out of such fund, he can remit up to $1 million US per year. That is around 8.2 CR per year. He can remit outside India from the NRO account, provided he has obtained 15 CACV certificate from the CA, and he has to prove that the investment, whatever amount is being remitted, is net of tax. So whatever amount is lying in NRO account, if CA certifies that the fund lying in NRO account is fully tax-paid fund, then out of such fund, up to 1 million non-resident can remit outside India to his host country. This was normally not available, but this is a special scheme introduced by the government for last 10-12 years, and we have built up huge forest reserve, and that is why government is okay, comfortable. Okay, go ahead. Let 1 million NRI take away from India. And second account is non-resident external account. Non-resident external account is physically in India, but practically non-resident external account is like account outside India. It is as if it is in foreign country. Because the fund lying in NRE account can be fully repatriated outside India without any restriction on the limit or without any condition. Unconditionally, fund lying in NRI account can be repatriated outside India. Who can open NRI and PIO? Here the concept of PIO is. They can open, and whatever fund they remit from outside India, they have to keep deposited in NRE account. Similarly, if the non-resident has got fund in NRO account and he wants to transfer to NRE account, so instead of directly remitting from a NRE account under 1 million scheme, he can also transfer to NRE account, because remittance outside India as well as transfer of fund in NRO account, both are on the same footing. So from NRO, one can transfer the fund outside India, or alternatively, if he wants the fund to be utilized in India, then he can transfer in NRE account, provided he has obtained 15 CV from the CA and CA is given to the bank and bank is satisfied that it is a net of tax fund, then bank will allow you to transfer the fund from NRO to NRE account. And similarly, fund lying in NRE account can also be used for the local expenses and for any repatriable investment. Okay. Shall we go to the next slide? Now, again, I have bifurcated the same thing, investment by NRE on repatriation and non-repatriation basis. First one is the investment in equity instrument. That is repatriation basis, and same thing you can also do under the non-repatriation basis. Here it is Schedule 4, here it is Schedule 1 and Schedule 3. We will discuss all this thing in detail, but I am just giving you the brief idea. What is repatriation investment, what is covered in the non-repatriation. That also we have considered earlier, the same thing. And investment in the capital of LLP is permitted to invest in India by the NRI OCI on repatriation basis as well as non-repatriation. That item appears on both the sides. And if some NRI wants to start proprietorship partnership, as we discussed, that is also permissible to non-resident OCI, but under non-repatriation basis. Now we'll discuss all this in detail. Yeah, this is foreign direct investment as a foreign direct investment in India by the non-resident. Okay, this is on repatriation basis. A non-resident wants to invest in India a huge amount, then preferable is to go under FDI Schedule 1 because under 1 million scheme, he can remit up to 1 million only. But suppose somebody wants to invest 10, 15 million, 20 million, then it is not advisable for him because otherwise he will not be able to take away the fund outside India. So when investment quantum is big, he can invest in this. Even small investment also he can invest, but normally up to 1 million, there is no problem. But the amount of investment by the NRI is more than 1 million, say 5, 10 million, 15 million, then it is advisable to go under this route. This is called foreign direct investment. You can form a company in India. The company can be a wholly owned subsidiary or joint venture. Suppose 100% investment is by the NRI, then such company is called wholly owned subsidiary. And if such non-resident has taken some local partner, then it is called JV. JV means joint venture between resident and non-resident. Okay. Now these are the businesses which are prohibited under FDI. Lottery business, gambling, cheat fund, nidhi fund, trading in TDR, real estate business, manufacturing of cigars, cheroot, tobacco related products, public sectors like railway, railway operation, atomic energy. These are the prohibited investment by the NRI. But in real estate, just to clarify that, here the definition of real estate under FEMA says the investment by the NRI in India in the real estate with the intention to earn some profit between the buying and selling price. If that is the intention, that is not allowed. But if some non-resident wants to buy a plot and develop and construct a residential, commercial premises, dams, bridges, anything, then such activities are not considered as real estate business, and such activities are permitted to non-resident, all non-resident, not only NRI. This is permitted to all non-residents. Even foreigners can also buy a plot in India, construct residential, commercial premises, dams, bridges, etc. Such thing is allowed. Strictly real estate means if my intention is to buy property and then sell it without any value addition, with the intention to earn some profit out of the purchase sale transaction. If that is the thing, then such item is considered as real estate business, which is prohibited for the non-resident. So these are the prohibited activities. So somebody wants to come to India by way of FDI. First thing you have to check that whether these activities are prohibited or not. If the activities are not prohibited, okay, then okay, you are comfortable. Now go to the next thing. Foreign direct investment is permitted in India under two ways: automatic route and government approval route. So under Schedule 1, RBI now Government of India has prescribed a list of all the terms and conditions for FDI. If you fulfill all the terms and conditions as prescribed under Schedule 1, then you can go under the automatic route. But something is not matching or something is going beyond the prescribed terms and condition, then you have to approach the Government of India, and Government of India may give you the approval or may reject your proposal. But under automatic route, you don't have to approach government. Straight away, you can start a company in India, bring the foreign investment and comply with the whole post investment formality. That is okay. But if it is a falling under approval route, then first you have to obtain government approval. Once you get the government approval, thereafter it is like automatic investment. Now, see, in equity instruments, there are three items covered. First is the equity shares. Second is fully and mandatory convertible preferences or fully and mandatorily convertible debentures. These instruments, even if they are as a debt reflecting in the Indian balance sheet, for FEMA purposes, if it is fully and mandatory convertible, then such instrument also falls under the equity instrument. But if it is not fully and mandatory convertible, if such instrument is not fully and mandatory convertible, for example, it is a redeemable or it is optionally convertible, then such instrument doesn't fall under the equity instrument. Such instrument fall as a debt instrument, and for which you have to comply with the ECB criteria. It is considered as ECB. Okay. The third instrument is share warrants issued by the Indian company. Okay. Now, RBI has given little bit more relaxation. In case of equity shares, even partly paid shares are also considered as equity investment, but condition is a minimum 25% is to be brought by the non-resident upfront and balance amount 75% to be brought within next 12 months. So if they fulfill this condition, then partly paid shares, which was earlier not allowed prior to 2019, such instrument is also considered as an equity instrument and allowed. Similarly, share warrants issued by the Indian company, that is also considered as equity instrument, provided 25% of the total amount to be paid is brought upfront and balance amount is brought by such non-resident within a period of 18 months. Now we'll go to the sectoral cap. Sectoral cap means government has identified certain industries, certain sectors, majorly 18 sectors, main sectors, and there are some sectors also. Against these sectors, government has prescribed what is the sectoral cap. Sectoral cap means how much percentage of the total capital non-resident can invest in a particular industry in India. Suppose the total equity is say 100. Then if non-resident sectoral cap is 74, then 74% is to be invested by the non-resident and balance 26% you will have to search from local partner. So that such entity is called JV, because 26% investment will by the resident and 74% by the non-resident. Okay. And if the sectoral cap is 51%, then only 51% can be invested by the non-resident and balance 49% you will have to have a local partner to invest in India, or else he cannot do the business. But most of the sectors bearing the 17, 18 sectors for which government has prescribed the sectoral cap, bearing these 17, 18 sectors, most of the sectors are under 100%. That also I mentioned, sectors which are not covered in the table provided in Schedule 1 are permitted up to 100% under automatic route. Now I will take you to sectoral cap. What is sectoral cap? One second. See, we have covered only 7, 8 items, because if we discuss all this, it will take 3, 4 or 6 hours even. So For agriculture, sectoral cap is 100% and it is under automatic route, but only limited number of activities are permitted under agriculture. See, floriculture, horticulture, cultivation of vegetables, mushrooms under controlled conditions, development and production of seeds, planting material, animal husbandry, including breeding of dogs, pisciculture, aquaculture, apiculture, etc., and services related to agro and allied sectors. These are the only activities permitted under the agriculture. All activities apart from these are prohibited. So 100% sectoral cap is there, but activities are specified. Only these activities can be cut. So floriculture means flowers, horticulture means gardening, pisciculture and aquaculture means fishing, and apiculture means honeybee growth for honey. These are activities covered under sector agriculture. There 100% sectoral cap is there, and it is under automatic route, no government approval is required. Apart from this, if anyone applies to the government for any other activity apart from this activity, then it is not permissible. Next one is plantation. There is a slight difference between plantation and agriculture. See, tea plantation, coffee plantation, rubber plantation, which is planted once and fruit, it gives fruit for a number of years, 5, 10 years, 15 years. Such item is categorized as plantation. So tea sector, including tea plantation, coffee plantation, rubber plantation, plum oil, olive oil, all these are permitted under plantation up to 100%, and apart from this, all other plantations are prohibited. These both the activities are under automatic route. Defense. If somebody wants to start the production of defense equipments in India, non-resident, okay, then permission is up to 100%, but automatic permission is up to 49%. So if non-resident wants to invest up to 49% and take 51% a local partner, then such activity is permitted under automatic route. But if non-resident wants to invest 100% or more than 49%, then he will have to apply to the government for the approval, and if government gives the permission, provided the technologies which is being introduced by the non-resident in the Indian defense field are such which are not available in India, or some modernization is there, and if government is convinced, then government will give the permission, or else sectoral cap is 49%. We have to read all the terms and conditions in detail. We don't have so much time. Now print media. If non-resident wants to invest in India, in Indian print media, then sectoral cap is 26%, but here there is no government approval. Here there is no automatic route. You have to go compulsorily under the government approval route. If government gives approval, then the maximum sectoral cap is 26%. More than 26%, nobody can invest in print media. So you'll have to have a balance partner of 74%. Construction business. Construction business is permitted up to 100% and under automatic route to NRI as well as all foreign companies and everyone. But there are so many terms and conditions mentioned over here. You have to comply with all the terms and conditions. If you comply with the terms and conditions, then such activity is permitted under automatic route. Trading. This is also a very big sector. Trading. Cash and carry means wholesale. Cash and carry is the concept used internationally, but in India we call it wholesale trading. If somebody wants to do wholesale trading in India, then 100% investment is permitted under automatic route. Wholesale trading means buying and selling both the activities from India, buying from the Indian seller and selling to the Indian customers, and that should be on wholesale basis, not a retail basis. Matlab he can sell only to the person, only to the businessman who is registered under GST or stop and establishment, means the other guy who is the customer of this entity should be registered with some GST, fees, stop and establishment license, etc. to prove that he is not the ultimate customer. So wholesale trading means you cannot sell to ultimate customer. You cannot sell in the retail market. You have to buy in wholesale and sell in wholesale. Such thing is permitted up to 100%. Again in trading, E-commerce is also permitted up to 100%. The first one I spoke about 100% wholesale cash and trading, that is a physical trading. And second one, B2B e-commerce activity means wholesale, but e-commerce online. And next one is marketplace model of e-commerce. This is the model being used by all Amazon and Flipkart and all these. They are using this model. They don't stock the goods. They play the role of a mediator. They buy from X and sell to Y, but they don't stock. They are not allowed to have the stock. That is called marketplace model of e-commerce. There also 100% under automatic route is permitted. Then single brand retail trading. Somebody wants to introduce the foreign products in Indian market. Then single brand retail trading is also permitted up to 100%, but up to 49% it is automatic, and beyond 49% you have to obtain the government approval. Hope slides are visible, no? Hello? Hello?
Yes, yes,
Hello?
yes, sir. Yes,
Yeah,
sir.
okay,
Yes, sir.
fine. I go
Yeah,
ahead.
yeah.
Okay. And
Yes, sir.
multi-brand. Now, instead of single brand, if a foreign company is manufacturing say 10, 15 brands, and if they want to start that trading in India, they want to capture the Indian market. So they have to come in the concept of multi-brand retail trading. There also retail trading is permitted in multi-trading, but the 51% is the limit, and 49% they will have to have a local partner, and that is also with the government approval, not under automatic route. Even 51% is permitted with the government approval. Similarly, pharmaceutical is permitted up to 100% for the greenfield. Here the distinction is greenfield and brownfield. What is greenfield? Somebody has formed a new company. Such company is called greenfield, wherein 100% investment in pharmaceutical company to the non-resident is permitted under automatic route. But if it is an old company, existing company, that is called brownfield. Then 100% 100% sectoral cap is there, but up to 74% it is under automatic route, and beyond 74% it is under government approval route. So if non-resident wants to invest beyond 74%, he'll have to take government approval. Up to 70% it is under automatic route, provided it is a brownfield. If it is a greenfield company, new company, then there is no problem. So I think I have covered 6, 7, 8 different sectoral cap slides. Okay, there are 18, 20 different sectors. So those who are interested to read, they have to go to particular notification NDI rules 2019 and select the schedule 6 and go to the particular sector and find out whether the activity is permitted and automatic route or not. Okay, now again we are going to the main presentation. So see, we discussed sectoral cap. Okay, sectoral cap means the limit of the percentage in equity capital of Indian company beyond which non-resident cannot make the investment. But if such industry, such sector is not covered in the list given in Schedule 1 of FDI, then such all activities are permitted under automatic route without any approval of government or RBI. Now question is, if investment is under automatic route, then if you are fulfilling all the terms and conditions of Schedule 1, then straight away you can bring the investment in India. You form a company in India, bring the investment in India. Okay. Now you have to comply with other post-investment formality. First thing is, such investment in Indian company is in a listed company and shares of Indian companies acquired through the stock exchange or with the permission of SEBI beyond 5%, then no valuation pricing guidelines is not applicable. Whatever value is determined by the SEBI or whatever value is transaction is done in the stock exchange, that is considered to be fair market value. But in case of an unlisted company, private company, when the new non-resident is making the investment, then valuation is mandatory. Valuation has to be done by chartered accountant, post accountant, SEBI registered merchant banker under any as per the internationally accepted valuation methodology. Except valuation is not applicable in a new company, unlisted company in India, if the if it is there in the minimum subscription, in the subscription of memorandum of association, the initially if non-resident is subscribed, I will be investing in so many number of shares, then value of 10 rupees is permitted. If it is not there in the memorandum, or if a company has already done the business for 6 months, 8 months, 10 months, 1 year, 5 years, then if non-resident wants to invest, then valuation is mandatory. Valuation has to be done by the chartered accountant, cost accountant, registered merchant banker under any of the internationally accepted valuation method. Second thing, if it is a JV and non-resident is invested 50% and 50% is invested by the resident, then resident cannot give any guarantee. Resident or Indian company cannot give any guarantee to the non-resident who is investing in the Indian company's capital that at the time of exit he will get so much. Today you are investing at a rate of 10 rupees, and after 5 years you will get 20 rupees. Such type of guarantee is not allowed to be given under FEMA, because there are so many companies who are giving temptation to non-resident. Okay, we'll double your money in 5 years, 6 years. You invest in our company, but such thing is not valid under FEMA. So no resident or Indian company can give any such guarantee. Whatever is the price at the time of exit, as per the valuation under internationally accepted method, that valuation has to be stick to, and they cannot give any guarantee. But in case of right issue, if the company has already got the investment by the non-resident and resident, or only non-resident, then if it is a right issue and shares are being offered to the existing sellers in the same proportion, then under such condition, valuation is not mandatory, provided shares offered to the resident, non-resident is not at a price below the price offered to the resident. So no, shares which are being offered to resident and non-resident, so whatever price shares are being offered, suppose to resident it is being offered at 15 rupees. So to non-resident, they cannot charge below 15. So they have to maintain the price for both resident as well as non-resident. So under any circumstances, company cannot offer shares to the non-resident at a price below the price at which shares are offered to the resident. This is the condition. If this condition is fulfilled, then valuation for the right issue is not required. Now, second thing, suppose the valuation as per the valuer arrives at say 15 rupees per share. The Indian company can issue shares at any price at 15 rupees or above 15 rupees, but not below 15 rupees. If Indian company issues share at 20, 25, 30, 100, 200, 500, there's no limit. Upper side, there is no limit, because India is gaining exchange. Instead of 15, India is getting more. So that is allowed under FEMA. But now under section 56 to 7B, investment received by the company from the non-resident is also hit under this if it is above the fair market value. Suppose the fair market value is 15 and shares are allotted at 20 rupees, then differential amount of 5 rupees is taxable in the hands of company under section 56 to 7B of the Income Tax Act. This was allowed till now, but if the proposals of the budgets are amended and accepted, then this will cause a problem. So we'll have to issue the shares at the exit value at which it is determined by the valuer. Now, if the investment is on a repatriation basis under FDI, then post-investment formalities to be complied with are they have to register under business user registration, entity master registration through the firm portal of RBI. RBI firm portal, you have to go and register all this, and you have to file from FCGPR online. And once the fund is received from overseas, from the non-resident, you have to make the allotment of shares within 60 days of the receipt of the fund, which is matching with the section of Companies Act, where also it is mandatory. Within 60 days, you have to make the allotment. And if company fails to make the allotment within 60 days, company will have to refund the amount within period of 75 days. That is, if 15 days are given extra for refunding. And if shares are allotted, then company will have to file Form FCGPR under firm portal within 30 days of the allotment of the shares or any equipment, equity instrument. Not it says, it is all equipments, instruments. Okay. And these are the documents to be attached with Form FCGPR. Unless you attach all the documents as listed out here, then RBI will not give approval to FCGPR. And till the approval is given by the RBI for the submission of FCGPR, till then, such investment is not considered on repatriation basis. So FCGPR is not approved by the RBI, then such investment made by the non-resident will be treated as an investment on non-repatriation basis. In case of NRI, OCI, in case of foreigners, it is not allowed. Foreigners cannot invest under non-repatriation basis. So here, these are the documents to be attached. First one is FIRC, Foreign Inward Remittance Certificate. We have to attach a certificate issued by the Indian bank through which the remittance is received from abroad. That is Foreign Inward Remittance Certificate. That is a conclusive evidence that money is received from outside India. Second one is KYC. Indian bank has to send a SWIFT message to foreign bank who remits the fund and obtain 6-pointer KYC detail, and then Indian bank will issue the KYC, and this KYC to be signed by the Indian banker, and this is also to be attached with FCGPR. Then they have given one company declaration that is also to be signed by the director of the company or secretary of the company or authorized person. Along with this, company has also attached board resolution for allotment of shares which are allotted. For it, company has passed a board resolution that is also to be allotted, and valuation is applicable, then valuation certificate is also required to be attached with this. Apart from this, we also have to obtain a certificate from the company secretary that is called CS compliance certificate, that the provisions of the Companies Act in relation to the new investment by the non-resident are complied with. Standard format is given by the RBI. You have to give the certificate, CS has to give the certificate in that format. And nowadays, after 2019, COVID-19, government has come out with one additional undertaking that the Indian company cannot receive investment from all neighboring countries, border sharing countries like Hong Kong, Bhutan, Nepal, China, Afghanistan. These are all neighboring countries where from investment cannot come to India under automatic route. If such investment is to be brought in India, then government approval is mandatory. But this undertaking is to be given by the company that the direct or indirect investment in Indian company is not through these countries. Indirect investment, suppose कि Indian company, somebody is investing in Indian company from say Dubai, and Dubai company has got investment from the Hong Kong. So that is also indirect investment in Indian company via Dubai. Such thing is also not permitted. So in undertaking, we have to clarifically state that no investment has come from the from any country, border sharing countries, directly or indirectly. Okay, and if shares are being issued on the right basis, then we have to attach the proof that earlier shares were allotted to foreign shareholders and local shareholders, foreign shareholders, and RBI had approved such investment, and approval letter issued by the RBI also to be attached over here along with Form FCGPR. Only then FCGPR will be approved by RBI. Now, friends, I think we have covered FDI portion. FDI portion means investment by the non-resident Indians or OCI on the repatriation basis. If it is on repatriation basis, then we have to comply with all the FDI terms and conditions. If it is under we are complying with the terms and conditions, then it is under automatic route, or else we have to go for the government approval. That part is over. Now I'm taking you to Schedule 3, that is portfolio investment. Some non-resident is sitting outside India and he wants to invest in the Indian shares and securities. So whether he can do, yes, he can do under Schedule 3. he will have to register himself as a PIS portfolio investment scheme with any banker, and all the transactions are to be routed through particular designated banker. He cannot do one transaction to one bank, another transaction to another bank. He has to designate one particular bank, and through that banker, first thing he has to register with that banker under PIS. PIS registration is very simple. Banker will give within 1 or 2 days. Once you are allotted PIS and register, PIS registration number, you are allowed to undertake such transaction. You can buy shares of Indian company to the stock exchange, but here there is a cap. Cap is 5%. The individual holding shall not exceed 5% of the total paid up capital, paid up equity capital of each series of debentures or preferences or warrants issued by the Indian company. So if the 100 rupees is capital, maximum investment non-resident individually, single person can do is 5%, not more than 5%. That is not permitted. And all NRIs aggregate, all NRIs put together, they shall not invest more than 10% of the paid up capital of each series of shares or debentures or warrants issued by the Indian company. So individual limit to the non-resident is non-resident cannot acquire through stock exchange shares of any Indian company which is more than 5% of the paid up capital of the Indian company. Maximum limit is 5%. And all NRIs together jointly cannot acquire more than 10% shares of the Indian company. But such limit of 10% is allowed to be raised to 24% by passing a special resolution in general body meeting of the company. So individual limit of 5% remains the same, but the aggregate limit of 10%. If the company so desires, the company can pass a resolution in general body meeting and raise the limit from 10% to 24%. Then total investment of all the NRIs can go up to 24%. Now, such NRIs in OCI can also invest without any limit. This limit of 5% and 10% is applicable here. Now in point number 2, such NRI OCI can also invest without any limit. The domestic mutual funds whose investment in the equity instrument is more than 50%. Those mutual funds who are considered as an equity mutual fund, whose investment in equity is more than 50%, they can invest in the share in units of the Indian mutual fund without any limit. There's a limit of 10% and 5% is not applicable. Such NRI and OCI can also invest in the public sector enterprise being divested by the central government. So Indian government is divesting only public sector. There also there is no limit they can acquire without limit. Now, how does this operate? See, NRI OCI first have to register as portfolio investment scheme, that is called PIS, and PIS number is allotted. Then they can undertake all the transactions to the designated banker. Now, NRI OCI will have to open 2 accounts in India with the same bank, designated banker, that is NRO and NRE. Purchase condition for consideration for the shares acquired from the market is to be paid through designated NRE account because it is a repatriable fund and this investment is on repatriation basis. So investment, the purchase consideration of investment should go from the NRE account. NRE is fully repatriable fund. So purchase consideration should go from the NRE account. And whenever such non-resident sells the security, then first the sale consideration is deposited into NRO account and it is a duty cast on the banker to verify. Banker will maintain a register. Who the NRI registered as PIS with you? When was the share purchase? When was the share sale? Whether it is a long-term capital, short-term capital, and accordingly, banker has to deduct the applicable TDS and pay it to the government. And after deducting TDS, when the fund comes to NRO account, first banker will have to check what is the purchase cost, what is the sale price, whether he had acquired these shares, whether it is short-term capital gain, long-term capital gain, whatever is the capital gain on which whatever is the tax that banker has to deduct and pay it to the government. And after deducting applicable tax from the consideration lying in NRO account, only the balance can be transferred by the banker to the NRE account from NRO account. So, since the fund is investment is on the repatriation basis, directly the sale consideration received for the sale of shares cannot be deposited in NRE account. So, banker will first transfer it to NRO account, and banker will deduct the applicable TDS, and after deduction of TDS, whatever is the net of tax balance, that balance is transferred by the banker from NRO to NRE account, and further payment from the next purchase shall be made from this NRE account. So this is the modus operandi. Now we are out from the schedule 3, which was investment portfolio investment by the non-resident on repatriation basis. Now we are coming to the third part of the repatriable investment, that is investment by the non-resident on non-repatriation basis under schedule 4. When non-resident does not have fund in NRE account, or he has got sufficient fund in NRO account, and he does not want to go under FDI rules and comply with all the formality, then the simplest way is he can invest under schedule 4 on non-repatriation basis. The problem over here is that whenever he sells the shares and whenever he gets the consideration, that he has to deposit in NRO account only. And out of NRO account, since the government has given the limit of 1 million for remittance from NRO account, up to 1 million, there is no problem. His consideration is more than 1 million, say 2 million, 5, 10 million, then a non-resident will have to think twice whether to invest under repatriation basis or non-repatriation basis. The amount, as long as the amount is below 1 million US dollar, that is around 8.2 CR Indian rupees, till then it doesn't make any difference. So he can freely invest in the Indian shares and securities without any limit under non-repatriation basis. Here, earlier the permission was only to NRI and OCI cardholders, but RBI has later on also given the permission to foreign companies, trust, partnership firm which are owned and controlled by such NRI or OCI. So NRI has got a company outside India or trust or partnership firm outside India, and he doesn't have fund in his personal account. So instead of personal account, he can transfer the fund from such company, trust, partnership firm which is owned and controlled by the NRI. Then such investment is also allowed to be made in India on non-repatriation basis, and the investment has to come on the equity instrument issued by the Indian company without any limit through the stock exchange or under private placement. Investment can be through the stock exchange, or it can be a private investment in an unlisted company, small company. He can also invest. He can invest in the units issued by the Indian vehicle without any limit through stock exchange or outside the stock exchange privately. Here, the capital investment in LLP is also permitted without any limit. And convertible notes issued by the startup is also permitted over here. All the above investments are considered at par with the resident investment made by the resident. So all these investments which are made under Schedule 4 on non-repatriation basis are considered as if all the investments are made by residents. So no compliance is required, no any formality is required. Now, only restriction over here is NRI and OCI. If they are purchasing the shares of Indian companies, say so if they are making investment in the units of domestic mutual fund, then there is no limit. But the mutual fund should have more than 50% in the equity instrument. So NRI and OCI can purchase and sell the units of domestic mutual funds without any limit, provided such mutual funds are equity mutual funds, means more than 50% of their investments are in equity instruments of Indian companies. Now the restriction over here under Schedule 4 is that all these entities are prohibited from undertaking the following activities: investment in equity instrument, units of Nidhi company, companies engage into agriculture activity, plantation activity, real estate activity, construction of farmhouse, or dealing in TDR, transferable development rights. These are the activities prohibited under Schedule 4 for the above investments. So if somebody is investing in the shares of Indian company or investing in the capital of LLP or mutual funds, etc., then these investments are prohibited. Go to next slide. Another option under non-repatriation basis investment by the NRI is NRI can form a partnership firm, proprietorship firm in India, and they can undertake all the activities except here the prohibition for the partnership and proprietorship by the NRI is activities restricted are agriculture, plantation, print media, or real estate business. There the activities were different. Here, if they undertake any business through partnership or proprietorship firm in India, then these are the activities not permitted to the non-resident. Even if it is on non-repatriation basis, such activities are not permitted to NRI OCI. Here the investment under Schedule 4 can be made by the NRI OCI from the funds lying in NRO account or NRE account, or also can be remitted from outside India. Funds can also be remitted from outside India. So all the options are available to NRI to blend the fund in India to start the proprietorship, partnership, etc. Here, the important point to be noted is, suppose NRI invested capital amount of say 1 lakh of rupees. So in terms of INR, it is 1 lakh rupees. And such partnership firm or proprietorship has made profit of 1 crore. Then profit being a current account transaction is allowed to be repatriated outside India. What is not allowed to be repatriated is only the principal amount of investment, original investment by the NRI. There is no limit on the remittance of the profit, but such profit can be remitted outside India without any limit, but subject to payment of Indian taxes. Whatever are the applicable taxes in India, that has to be paid, and only the net fund, net of tax, can be remitted outside India from the income. Principal is not permitted. Principally, you will have to go under 1 million scheme, but current account transaction income is fully repatriable. So at the time of the exit, whatever is the principal investment, that NRI has to deposit in NRO account, which is under normal circumstances not a repatriable fund. But since I told you that 1 million scheme is there per financial year, that is allowed to be repatriated from the NRO account by any NRI OCI per year, but subject to the condition that he has to obtain 15 CB from the CA and issue 15 CA to the banker as a proof that applicable taxes have been paid on such investment. So shall we take question or how shall we do? Hello? Hello?
Yeah, hello.
Hello, madam.
Yes, sir. Tell me.
Shall
Yes,
we
sir. Tell
take
me.
question in between or at the last?
Sir, as you wish.
No,
What is
whatever is the choice
comfortable
of
for
you.
you? Because there are more than 20 questions in the chat box and question answer session. So if you want, I can ask you one by one.
I think we'll complete in 15-20 minutes, and then we'll take half an hour for the questions. That will be okay?
Yeah, yes, sir. Okay.
Okay. Now, one more concept I want to bring to the notice of all the participants, since all are chartered accountants, they must know why the concept of limited liability partnership LLP was introduced in 2008. What was the purpose behind this? Prior to introduction of LLP in 2008, there were only two entities, Private Limited Company and Indian Partnership Act 1932. These were the two entities available to the non-resident. Okay. Now, both of them have got some pros and cons. Advantage of Private Limited Company is limited liability. And disadvantage of private limited company is double taxation. Whatever profit company earns, first company will have to pay tax, say 30%, 25%, whatever is applicable. And whatever is the profit net of tax, that is to be distributed as a dividend to the shareholders. Then again, we have to deduct, earlier it was DDT, DDT is gone now. Now we have to deduct TDS. For the non-resident, the rate of tax is 20% under Income Tax Act, or rate available in the treaty. If it is lower than 20%, we can go for the treaty benefit. Okay. So question is, suppose non-resident earns income of 100 rupees and 25 is paid as tax, you will get 75. On 75, again we'll have to deduct 20% TDS for the remittance of dividend to non-resident. And again, if in the home country of the non-resident, the rate of tax on dividend is 30%. So again, you will have to pay 10% over there. So total tax will be 20 plus 10 plus 25. It will be more than around 50%. So that was a disadvantage for the company. And in case of partnership firm, what is the advantage? There is no double taxation. If firm pays 30% tax, balance 70%, partners can take that is take home amount of the income, 70%. But the disadvantage in case of partnership firm was unlimited liability. If the business of the non-resident in India is exposing some huge risk, then they are not interested to go for such entity. So they were very much cautious. They will not go in partnership firm, because if something goes wrong, because in India there is no much problem of the exposure. In foreign country, they believe in so much risk exposure. If you are selling perfume, and if somebody sprays perfume in the face and something goes wrong, and he can claim $50,000, then you have to pay it. That is a thing outside India. So all the non-residents who wanted to enter into India, they were very much hesitant to go for the structure of the partnership firm. So compulsory, they had no option but to come to private limited company. But now since 2008, RBI has introduced, Company Act has introduced new concept of limited liability partnership. And both the advantage of private limited company and partnership firm are picked and put here in the LLP. In LLP, what is the advantage? Limited liability. And what is the benefit? There is no double taxation. Whatever profit is earned by the LLP, after paying tax by the LLP, the balance can be taken away by the non-resident in his home country. So there is no double taxation. So this is the major benefit to the non-resident. Okay. Go to next slide. Now, this is the investment by the non-resident in India under Schedule 6, that is in LLP. If non-resident was to invest in India through LLP instead of private limited company, then what are the terms and conditions applicable? Now, here the restriction is citizen of Pakistan and Bangladesh, or entity of Pakistan and Bangladesh, means any entity, partnership firm, private limited, or any entity incorporated in these two countries are not allowed to invest in Indian LLP under automatic route. They have to apply to the government for the approval route, which is almost impossible. Government won't give permission for such investment. So if the NRI or OCI is not from these two countries, then investment in LLP by them is permissible under LLP in India. Now, one more condition over here is, if it is to be invested on repatriation basis, then we have to see two conditions. Under FDI, investment in LLP, if it is on repatriation basis under automatic route, then foreign investment settle cap for that particular industry, we have checked the settle cap, no? So you have to go to same settle cap and see if it was a private limited company and investment has come by way of FDI in the private limited company, what is the settle cap? If investment is up to 100% as per the settle cap, and there is no any performance linked condition attached to such settle cap, then such investment is allowed in India by the NRI OCI in LLP without any restriction. So what you have to check is a particular sector, industry, business for which LLP wants to do the business in India. They should be under 100% sectoral cap as per the FDI policy, and there should not be any performance linked condition. What is performance linked condition? If you go to the construction business, we have discussed now construction business. If you go to construction business sector, then they have got lots of conditions. You have to comply with this, you have to finish the construction within so much time, this, that. So many conditions are there related to the performance. If such conditions are there in the FDI schedule, then such activity is not permitted to LLP under automatic route. Compulsorily, LLP will have to go to government approval route. So I think now this point is clear. It's like private limited company, valuation of LLP is also required to be done under internationally accepted valuation method by the CACS as described in the companies. Okay. In case of a new investment, as well as in case of transfer of the existing investment in LLP by one partner to another partner. So one partner wants to exit and another foreign partner wants to enter. Then also valuation of LLP is to be done. Yes, here there is no shares issued by the LLP. So if 25% shares are being allocated to by a non-resident partner, then you have to value the entire firm, LLP firm, and take the 25% of that, and you cannot charge below that to the non-resident. You have to charge something equal to or more than that. Investment can be done from NRE account held by NRI. In case of NRIs, because this route of LLP is not only for NRI or OCI, this is also allowed to all foreign investors, maybe a foreign partnership, absolute foreign or private limited company, LLP, anything, any entity outside India, apart from NRI. So if NRI is the investor, he has got option, okay, he can invest in Indian LLP out of the fund lying in NRE account held by him. But in other than NRI, the person is not Indian, then he is not allowed to open NRE account. So option with him is to make the direct remittance of the fund in Indian LLP. Okay, so NRI can bring the fund from NRE account. Other than NRI, we'll have to make direct remittance from outside India. Here also, the current profit earned by the LLP can be repatriated outside India subject to taxes in India. Okay, this is also a current account transaction. Any income earned in India by non-resident, whether foreigner, Indian, NRI, OCI, any foreign company, is considered as a current account transaction, and current account transactions are fully repatriable outside India. There is no any restriction except payment of tax in India. And once tax is paid and 15 CB is issued by chartered accountant, then such remittance of current income, current profit can go outside India without any limit. If the LLP is not falling under above criteria of 100% and performance linked condition, then compulsorily it will have to go to the government for the approval. If government gives the approval, okay, they can go ahead. And now one more thing, in case of private limited company, when non-resident makes an investment, he has got two options: to invest in Indian company by way of equity or by way of debt, that is called ECB. Such options are available in case of a private limited company. But so far as the investment in LLC private limited company or limited company and not in LLP. I think, Pinky madam, we have completed the, hello,
Okay, okay, sir.
we have completed our routine discussion. Now, if questions are there, we'll discuss the question.
Yes, sir. There is many questions in the chat box and in question and answer section. I will ask you one by one, or you can read out.
Yeah, you can read
whatever
one by
can
one. I will repeat.
Okay. So can we get an example? Is any person holding an foreign passport is an OCI?
See, simply by holding foreign passport is not OCI. We'll have to register under Section 7 of Indian Citizenship Act 1955, and Indian government will issue OCI card. If he holds the OCI card, then he is considered to be an OCI. There is a proof. Okay, he is a person of Indian origin.
Okay, sir. Second question, are NRIs allowed to invest in mutual fund? I think that we had discussed.
Yeah, we have discussed. He can invest in equity and debt both.
Okay. Whether the other conditions are considered as FDI linked performance condition?
No, that is a very big question. And we as a professional are also facing the same question. You have to analyze the condition and check whether it is a performance linked condition. If it is a performance linked condition, then only investment in LLP is not permitted under automatic route. You have to see whether any conditions are there for the most of the sectors. If you go to the sectoral cap, other than sectoral cap, which are not mentioned in the sectoral cap, all other industries are permitted up to 100%. In such cases, no this thing is required. But performance linked condition is a genuine question, because if you read all the conditions, then you'll come to know whether conditions are there, performance linked conditions are there or not.
What is Patka? Patka is the
No, Patka is
it
not
is
here.
more- Yeah. If NR purchased existing company 100% stake, will it be a greenfield or brownfield?
No, in case of pharmaceutical, they've given distinction of greenfield and brownfield, okay? But in case of other sectors, there is no such distinction. In case of pharmaceutical, if the investment is more than 74% by the NRI, then it is considered as a brownfield and government approval is required.
Oh, they are asking if they purchase existing company shares. So whether
Then
there is any rule that
it is brownfield. Existing company means brownfield. Greenfield means new
Okay.
company, ekdam fresh company.
Okay. Should FIRC and KYC contain same address? Will there be any problem if there is any difference in address?
This is $1 million question. We have faced so many times this problem. Address has to be same, because KYC detail and FIDL both are issued by the foreign banker. So foreign banker are giving both the details to the Indian bank. Then address has to be same. If there is a difference, then that is not permitted.
Can NRI take loan in NRO account from bank and use the same to make investment on non-repatriate basis?
No, that is not permitted.
The client is now a resident. When he was a NRI, he had funds which was retained in his Singapore bank account. As per the new rule, does he have to bring the fund back to India?
See, you are talking of the LRS. When he was a resident of India, that time he had invested under the LRS
No,
scheme.
no, no,
correct?
no.
Fund is-
At right now, he is resident. When he was NRI, at that time, he
Okay.
whatever he earned their money, that money is lying in Singapore bank. But now he is resident. So whether it is
That is
compulsory or
allowed. Understood.
whether he has to bring the fund back to India.
No. See, this is a general rule. If a non-resident who stayed outside India for a number of years and he has on lots of income over there, he has invested in shares, securities, properties, and done many investment outside India. Whenever he comes to India and becomes resident of India, whatever assets he has generated, whatever property he has acquired outside India, he can retain under Section 6(4), that is general permission, and vice versa. Resident becomes a non-resident, and resident has acquired many property in India. That also he can retain in India. No need to make any changes. No intimation to RBI is also required. So both the way it is permitted. No intimation to RBI is required after the change of
Okay.
the status.
Okay. Please explain the forms to be submitted to RBI at the time of formation of subsidiary in India by foreign company.
FCGPR. Form FCGPR is a mandatory form to be submitted to RBI through RBI portal. RBI form portal, you have to first register as business user entity master, and you have to make all the attachments and submit the form online. And once the form is submitted and approved by the RBI banker, within 30 days, if you submit the form, then it is approved by the banker, and beyond 30 days, it goes to the RBI, and at the most, it takes 8 to 10 days. If it is within that time, the banker will have to approve or reject within 4 to 5 days. If it goes to RBI, that it takes 8 to 10 days. But form FCGFR is the only form to be submitted if the investment is on repatriation basis.
Okay. Can overseas investors provide ECB to LLP in India?
LLP, I just now discussed. LLP cannot accept ECB at all. It has to be only to the company. If the money is to be brought in India by way of ECB, then only in the company, private limited, public limited, it is possible. LLP cannot accept ECB.
If one wants to buy a property in India, is it better to make payment from NRO or NRE?
See, it depends upon the capacity of the investor. He has got sufficient fund in NRO account, he can invest from the NRO. He can also invest from the NRE account. But if the property is acquired with the use of the NRE fund or overseas remittance, then such investment is considered on repatriation basis. So in future, whenever he sells the property, he can take away the full amount, whatever he had invested in India originally.
Okay. Can NRI continue to hold NPS or PPF account?
Till maturity. He cannot make a new investment in PPF.
But in NPS?
NPS is permitted. Yeah, NPS is permitted in debt fund. 1 second. Let me check it. Debt fund. That is a debt fund. It is on. Yeah, it is permitted on next.
Yeah. NPS is the National Pension Scheme, na sir?
Yeah. Subscription to National Pension Scheme, slide number 3. It is there on repatriation basis. It is permitted. That is permitted.
Okay, so he can.
In the slide number 3.
One can invest in NPS through his NRI account, NRE account, not from NRO.
Definitely.
If he will invest from NRO, then it will not be allowed, I think.
No, that is not allowed. Only on repatriation basis it is permitted.
So yeah, so it should be clear that if they want to invest in NPS, they have to invest from NRE account, not from NRO account.
Or direct remittance from outside India.
Yeah. And PPF is not allowed to be
PPA
continued.
is not allowed. PPA allowed till maturity. If a resident had already opened a PPA account and if he leaves India till maturity, he can continue the balance lying in PPF account, but he cannot.
But no new investments he can do.
No, new investment is not permitted.
Yeah. At the time of investment as capital in partnership firm in India by NRI, whether intimation to RBI is required?
See, investment in partnership in India by the non-resident or OCI is permitted on non-repatriation basis. And any investment made in India by any NRI OCI on non-repatriation basis, no any formality with RBI is required. Only thing is they have to see the whatever business are prohibited to the partnership firm, such business that firm should not undertake. Rest of the things are permitted, no intimation to RBI is required.
Okay. About buying a property in India, what if one makes payment from NRO and NRE account on sale of the property? Does amount paid from NRE be repatriated? Is there no TDS?
TDS is applicable on the profit. TDS is applicable on the profit, not on the principal amount. So if he has made the profit.
No, sir. In case of sale of property, it is on principal amount, na sir?
Suppose he has invested, say, in a property of say $500,000 is invested in India. Okay. Today the rate of 82. And say after 10 years he is selling the property. Then again we will have to consider the consideration in INR into foreign currency. And if foreign currency is more than 5 million, then only tax is applicable. You have to convert the foreign INR into foreign currency and compare what was the original amount brought into India and what is the amount now.
Okay. But in many cases, if NRI is selling the property in India, there is TDS under section 195 on
Yeah.
principal amount.
Yeah, but that is the way.
As per their,
See,
as per nature of capital gain, that is, if long-term capital gain, the rate will be different, and in short-term capital gain rate will be different.
see, person when he was a resident of India and he had acquired property in India out of his local fund, and now he has become non-resident and settled abroad. So whatever sale consideration he receives, he will have to obtain lower TDS certificate from the income tax department and deduct applicable tax, and whatever is the balance with 15 CACB, he can make the remittance of the net of taxes fund.
Does loan taken from bank situated in gift city treated as ECB for the purpose of applicable regulation?
Yeah, definitely. All the entities which are there in the Gandhinagar, gift city, that territory is considered as a foreign territory. Even if that territory is physically in India, but for the FEMA purpose, such territory is considered as a foreign territory. So there are so many foreign banks which have come to gift city. If you take any loan from such gift city, that is also considered as ECB. You have to comply with all the ECB criteria.
FCGPR are not filed as bank, cooperative, unable to issue remittance certificate.
That is a practical problem. It happens in many cases. The bankers are not willing to issue or not able to issue FRC or KYC. And because of these two things, these are the two major documents. Because of these two documents, you cannot file FCGPR, and banker or RBI will never approve. That is why when new
Sir, what is
investment
the
comes,
practical solution?
you have to approach the bank only. Why banker is not issuing the FRC? What is the problem? KYC or FRC?
No. FCGPR are not filed as cooperative bank. Bank is cooperative bank. That's why. So, sir, what will be the?
I didn't. FCGPR is not filed. Why?
Because they are saying the bank is cooperative bank.
No, that is then it is not permitted. Investment is by the NRI. Investment is by the NRI. Then you can consider such investment on repatriation, non-repatriation basis.
Okay,
But
let him clear. What is this? A person was holding agricultural land in India before becoming NRI. Whether he can continue to hold the same, whether he has to inform RBI about it.
Whatever agricultural land he had acquired before he became non-resident, that is allowed to be retained in India under Section 6(5) without any restriction. No intimation to RBI is required. But he cannot acquire any new agricultural land after becoming non-resident.
Can a resident individual who is having a foreign currency account transfer the same and open a foreign currency bank account in gift city?
He has got foreign currency bank account in India.
Yeah, resident individual. Can a resident individual who is having a bank foreign FCA account is there, so he want to close it and want to open a foreign currency bank account in gift city?
He cannot he cannot open such account in gift city, but if he wants to invest in gift city by way of FDI, etc., then the fund lying in this foreign currency account can be transferred to that account as a FDI. He cannot transfer. How can one resident of India transfer the account to gift city?
Okay. Foreign creditor debtors of private limited company outstanding for more than 3 years. What compliance to be done under FEMA?
Foreign debtors and
creditors of private limited company outstanding for more than 3 years. But it should become within 365 days, no, sir?
No, it is 9 months. Within 9 months, if you have exported the goods, then it has to come within 9 months. And in case of export, it is 6 months. In case of import, it is 6 months. But it happens in many cases that both are remaining outstanding for a long duration. If period is below 3 years, then banker will give the permission. If period is above 3 years, then you have to approach RBI for the specific permission.
Okay. So we can't treat it as a bad debt, or we make it a provision for that.
See, export is receivable. You cannot write off on your own without any this thing limit. There is a limit of 5% and 10%. You have to comply with the export circular. If the total foreign remittance on account of export during the previous calendar year is so much, then 5% of that you can write off without RBI permission, FDI permission. But you cannot write off big amount. Small amount within 5% or 10% is allowed. 5% or 10% of the inward remittance during the previous calendar year.
Okay. If OCI has invested from INR account in India, private company, then form FG is not required. Can he remit out of India dividend in such case?
See, so far as the remittance of dividend is concerned, there is no problem. It is a current account transaction subject to payment of applicable taxes. Remittance can be made without any restriction. But what he said from NRI account, what is NRI? It is NRO or NRE? What is
No,
NRI account?
INR account, INR account.
INR account. Okay,
Indian rupee.
INR account. That is okay. He can make the investment in Schedule 4. Schedule 4 investment
question
is on
is
repatriation basis.
Sir, question is if OCI has invested from his rupee account in India, Indian private company, then form FCGPR is not required.
No, it is on non-repatriation basis. No formality is required.
Yeah, because NRI is investing from his rupees account.
Yeah.
And can he remit out of India dividend in such case?
Dividend is a current account transaction. It is always permissible. Whether original investment is on repatriation or non-repatriation, amount of dividend declared by the Indian company is allowed to be remitted subject to payment of taxes as per income tax or as per DTAA.
And second question is, can dividend be paid from LRS limit?
No. Why the LRS and dividend connected? LRS is
I'm also, sir, I'm also
LRS is
thinking how.
applicable to resident and dividend is due to the non-resident. So how can you connect two things?
Yeah. FCGPM limit of 30 days from allotment of shares or after the amount is received in India.
FCGPR is to be filed within 30 days from the date of allotment of shares by the Indian company, shares or equity instrument by the Indian company. If it is period of 30 days is kept, then you can file FCGPR, but matter will go to RBI, and RBI nowadays will levy a token penalty, late submission fee, and with that RBI will approve your form. It is not a big issue.
So he's also saying that in one of our case, due to technical issue, amount was received after 1 year of company incorporation. So what is the remedy for that?
Amount of?
Amount was received after 1 year of company incorporation.
Yeah, practically what happens when you form a company in India, in memorandum of association, you put the figure, okay, so much amount will be subscribed by so and so a person. Okay. Normally, there is no any time limit within which you have to bring the fund to India. But if the company is formed in April and fund is received, say, in the month of March, after say 11, 12 months, that is okay. But if fund is not received till the end of the financial year, then even the company is invalid, because without the capital of rupees 1 lakh, company, you cannot audit the accounts of the company. Company cannot file any document with ROC.
Yes. Yes.
Practically, there are many solutions people do, but we can't advise it.
Okay. In case of FDI in company being formed, will valuation be still required as shares are issued at face value?
Can you just repeat the question?
In case of FDI in company
Hmm.
being formed, will valuation be still required as shares are issued at face value?
See, the number of shares are as per the number of shares mentioned in memorandum of association, subscription, initial subscription. then valuation is not required. If the person who is investing in the Indian company as FDI, his name was not there in memorandum of association, then valuation is mandatory.
How much time it takes to get approval under government route?
Government,
Government,
we have taken some approvals from the government. They take sometimes 6 months, 8 months, 10 months, 6 to 8 months minimum you can take. Or that is also not sure you'll get the approval. You may also get rejection.
That's true. An NRI, Indian citizen and resident in Gulf country, investing in share capital in new formation of company, investing fund from NRO savings account. Is that valid or need to show status as NRI in incorporation and pay from NRE account? The shareholder doesn't want to take dividend back to Gulf country.
No problem. No need to comply with any formality. They can invest in Indian company without any restriction. No compliance is required. Only thing is that they cannot invest in prohibited business.
Sir, what he's saying he doesn't want to show his status as NRI also in incorporation, but it will be a false
No, that is wrong. That is
submission.
wrong. That is wrong. You will have to show non-resident.
He has to declare that he is NRI.
Yeah. Many people do like that, but that is not advisable. Nobody questions. हाथी का हाथी निकल जाता है, लेकिन that is not advisable. I don't advise. If you are a non-resident, you have to declare.
In many cases, they are buying property in India, but they are not declaring to the buyer that they are NRI. After they are filing the return, the so-called notice or demand notice come to them ki why you had not deducted TDS, the seller was non-resident.
That is wrong. That is wrong. Many people do like that. When many non-resident who have got property in India, they give on lease to Indian resident, and in the agreement they declare as a resident. Because if they declare as a non-resident, then 30% TDS is deducted.
Yes.
So they declare as a resident, but this is wrong. This is wrong. We don't advise such things.
Yeah. Investment by NRI into an unlisted company by way of equity shares investment. Then whether it is mandatory to check the FDI limit of the company in which the NRI is planning to invest.
If it is on repatriation basis, then sectoral cap needs to be checked. If it is on non-repatriation basis, no compliance, nothing is required to be done. Only thing is that what our business prohibited, such business he cannot undertake.
Can NRI take loan in NRO account and use the same? We can. Whether the other condition are considered as FDI, वो भी हमने ले लिया. Is OCI allowed to buy residential property to benefit from buy and sell? What the limit?
See, so far as the non-residents are buying property in India, 1 or 2 property, that is allowed, nobody questions. But frequently they keep on buying and selling the property, then it is a real estate business which is not permitted. So far as 1 or 2 properties are purchased and sold after 5 years, 10 years, that is not a problem. Nobody will keep the track.
That will be treated as investment or self requirement.
That is investment. That is investment. Frequently they buy and sell the property, then it is considered as business.
Yeah.
And if it comes to the light and is caught by the RBI, then only problem will start. Otherwise, nobody knows.
If one holds 5 acres of hereditary farmland between 3 people, one of them is OCI card holder, how much additional land can be bought by OCI?
He has got farmland.
Hereditary farmland.
Agriculture land. NRI OCI cannot buy any agriculture land in India. Once he becomes non-resident, they cannot buy any agriculture land in India. What are the existing agriculture land that they can hold?
But new investment, they
cannot buy. That is prohibited.
All are asking, sir, whether if you can share your PPT. And one of the person is asking if it would be useful if Naren sir contact detail can also be shared.
I have shared my detail in the presentation, phone number, mail ID, everything. All are welcome, no problem. I will
sir, I will
help
write you.
everyone honorary. I will provide help to all the participants. Honorary help. Don't worry. Anytime they are welcome. This is the
Person
detail.
is a, yeah, person is a US citizen, but tax resident as well as FEMA resident since residing in India only. Investment in private limited company by way of subscription of equity shares to be done from INR savings account. Will this trigger compliance requirement?
The
From
person is basically a
FCDPF.
resident of India.
Person is US citizen,
Okay. Citizen, forget the citizenship, whether he is residing in India or
but
abroad.
tax resident as well as FEMA resident since residing in India only.
Okay, then he is a resident. Forget the citizenship. Citizenship is not the criteria for FEMA.
So investment in private limited company by way of subscription of equity shares to be done from INR savings account. Will this trigger compliance requirement?
No, it is on non-repatriation basis. No requirement, compliance requirement at all.
So refer slide 15 in company versus LLP.
Slide 15.
Yeah.
Okay.
In company, one company can invest full and make a nominee shareholder, but in LLP, we need two partners. When promoter doesn't want another shareholder, he cannot make LLP. Is this not reason against LLP?
No, I didn't understand the question properly. In Indian LLP,
In company, one company can invest full and make a nominee shareholder. But in LLP, we need two partners.
Okay.
In one
Okay,
member
understood.
company.
Yeah.
Can invest full and make a nominee shareholder, but in LLP we need two partners.
Yeah.
When promoter doesn't want another shareholder, he cannot make LLP.
No, it is mandatory
is
under
this-
LLP Act.
Yeah.
One partner of Indian is mandatory. Even in company also one director
Yeah,
is
in company
mandatory.
also in India also, sir. In Indian company also.
एक पार्टनर तो चाहिए ही चाहिए आपको उसको 0.25% दे दो ना, you give just token amount of 0.25%.
Yes.
But 100% investment in LLP is not permissible.
Yeah.
Under the LLP Act, under the FEMA Act, it is
under
okay.
LLP, not it is not under FEMA Act, sir. It is LLP Act that you need two partner.
Correct.
Sir. Can an NRI who has initially invested in an immovable property, say property A in year 1, by directly paying to builder, but thereafter gets it exchanged for another immovable property, say property B, also in year 1, and now want to repatriate the sale proceed of the second property B in year 7 back to his account abroad from his NRO account in India?
Question is not that simple, so I can't answer often. We need to understand the situation properly, and if the concerned participant sends me the mail or calls me, I will reply to it.
Yeah, how it exchanged and what was the procedure for exchange from property A to property B? What was the term and
understand
condition?
the transaction properly.
Yes.
Rather than the income tax angle also, it is difficult.
Yeah. Can now non-resident can invest 100% in LLP on repatriate basis, keeping other partner as designated partner?
Yeah, some share he has to give 1%, 2%, 5%, 0.5%. One partner has to be there, designated partner, resident of India.
So but can't investor 100%, na?
No, that is not possible.
99.5% can be possible, but 100% can't be.
0.05%. Yeah. थोड़ा बहुत तो देना चाहिए ना इंडियन पार्टनर को. They cannot, non-resident cannot take away the full amount.
Any restriction of person going outside India for studies in respect of existing investment in mutual fund, PPF or equity share other than non-repatriation? So
person was a resident and now he becomes non-resident because he has taken visa as a student. He's going abroad. His status is non-resident. So whatever activities are not permitted to non-resident, if Indian partnership firm, company, wherever he is a partner or investor, and such investment is there, then they will have to liquidate that. It is not permitted.
ये सब हो गया. If wife travels along with husband who goes outside India for employment, will even she be treated as non-resident on the day she leaves India? Can I NRI who goes outside India for employment continue? हाँ, ये तो दो क्वेश्चन अलग हो गया. If wife travels along with husband who goes outside India for employment, will even she be treated as non-resident on the day she leaves India? नहीं,
Definitely.
ऐसा तो नहीं होगा.
नहीं होएगा होएगा. Practically is out of she is out of India, no?
Yeah, if she lives there.
Yeah. Husband takes up job and stays over there for 3 years, 5 years. Then wife will also stay there, no? Once the stay of
Yeah,
wife
yeah, for
exceeds 1
resident.
and 2.
Yeah, for non-resident criteria, he should live there, whether he is employing or not employing, or
Yeah,
whether he is
right.
in work or not. That is not the criteria.
That is not the criteria, correct?
Yeah. Can NRI who goes outside India for employment continue to invest in PPF? That we had discussed. कि
PPF
PPF में
already
नहीं कर
discussed.
सकते.
Right.
As a NRI, if a person acquired a flat in India, which is given on rent, after some year he takes the passport of another country and have taken OCI, can he still continue, or does he need to apply for change of condition?
No, not alone. Non-resident means whichever country is staying in X country, Y country, Z country, and acquired property. When he was a non-resident, he can continue to hold the property in India. Nothing, no intimation is required to RBI.
Can NRI invest as a capital in partnership in India? If yes, then at the time of investment, whether any intimation required to RBI?
I've told number of times. It is
Yes.
a non-repatriation, no compliance is required.
Can we get PPT to मिल जाएगा. A person was resident and filed income tax return 10 years ago. Now he is NRI. What fund is to be done for filing his IT return now? See, he informed he changed residence. Yes, he has to inform his change residence status to income tax, not income tax department. I think they have to make a user ID login in income tax side, and there they have to declare that they are NRI, and their his passport and all these things they have to declare there, and then
Right.
they can file their return.
Right.
Yeah. What is the consequence of non-submission of FCGPR?
If invested is by the NRI or OCI, then there is no problem. Such investment will be treated on non-repatriation basis under Schedule 4. But if investment is by other than NRI, OCI, foreign company, a foreign trust, any foreigner, then it is a violation. Because FCPR is not submitted or submitted and not approved, then such investment is lying in India. But at the time when he exit from such investment, he cannot repatriate it outside India. That is a violation.
When an NRI OCI returns to India for permanent residence, whom he should inform?
Banker.
RBI
No.
bank where his account are, and within what time period?
There is no any time limit mentioned, but banker he will have to inform that he is now become resident. So whatever the NRO NRE account, they will transfer to SB account. And if they are holding shares and security of any Indian companies anywhere, then they will have to inform to the respective company mutual fund. And now they have become resident of India, so they will make the change in the status.
If NRI holding PPF till maturity, what he continue to get interest till maturity, and what is the tax liability? PPF interest is tax free, na sir? For NRI also
Yeah,
it is tax
it
free.
is exempt. It is exempt. No question of
Yeah.
tax.
What would the FEMA reporting obligation be for a NRI OCI who is a trustee beneficiary of private family trust registered in India?
I think there is no any requirement to submit any details or information to RBI if NRI has taken up the directorship or NRI has taken as a trustee of Indian company or trust. No, nothing is required. Nothing is required under FEMA.
Any person going overseas for study, is he considered as a non-resident under FEMA?
Yeah, it is considered as a non-resident. Earlier there was a confusion, but now RBI has come out with the circular. Non-resident resident or student living in India is considered as a non-resident because chances of student going abroad or coming back are very rare. वो गया तो एक बार उधर ही फंस गया।
वो सब सोच के माँ बाप भेजते हैं कि एक बार गया तो भी गया बच्चा हाथ
एक
में।
लड़का है तो भेजने का थोड़ा टेंशन लगता है कि भाई मेरा एक लड़का है, मैं नहीं छोड़ता हूँ।
तो सर जिस दिन वो चल जाएगा उसी दिन से नॉन रेसिडेंट हो जाता है क्या?
यस।
ओके, सो कैन एनआरआई ओसीआई होल्डर फॉर्म एचयूएफ इन इंडिया?
नहीं, एचयूएफ फॉर्म ही नहीं कर सकते। एचयूएफ फॉर्म कहाँ से होएगा? दे कांट फॉर्म। इट इज इंडियन कंसेप्ट प्योरली। एचयूएफ इज इंडियन कंसेप्ट। पूरे वर्ल्ड में nowhere in the world such concept is the equivalent to HUF.
सर एचयूएफ खाली ज्वाइंट फैमिली इंडिया में ही है कंसेप्ट।
करेक्ट। बाकी सब जॉइंट है ही नहीं किधर।
सर हस्बैंड वाइफ ही साथ में नहीं रहते तो ज्वाइंट फैमिली का
हाँ,
क्या?
तो बाद में किधर है? जॉइंट फैमिली की बात ही नहीं। आउट ऑफ क्वेश्चन।
Person is a US citizen but tax resident as well as FEMA resident. Since residing in India only and engaged in business, new investment in private company to be done by way of subscription of equity share. ये तो अपने लोगों ने भी जवाब दे ही दिया सर
करेक्ट
कि
ऑलरेडी
कर
वी हैव
सकते हैं।
रिप्लाइड। कर सकते हैं, नॉन रिपीटेशन
हाँ,
जैसे।
yeah. And are settled abroad, sell property held before he left India and want to repatriate the amount. Is it possible? Yes, it is possible.
Under 1 million,
Hmm.
subject to payment of applicable taxes.
Yes. Can anyone having private limited company in foreign country open an LLP in India as sister concern and invest the capital?
So investor is a resident of India who is having a
That is not. Person is Canadian citizen.
Canadian citizen. He has invested.
He has a private limited in his country. He want to open an LLP in India as sister concern and want to invest the capital. Whether he can do that
Yeah, he can do. No problem. He can open number of companies. There's no restriction.
in India as a sister
Yes.
concern?
Not sister concern.
No,
It is his own company. You can call it sister concern. No problem.
no, they are saying not. They are asking for not a company. They are asking for LLP. कि whether they
If you
can
have formed
open
one
LLP in
company, you
India.
can form one more company, two more LLP, number of entities they can form. There is no restriction.
Okay.
Each and every
If
entity
agri-
is a separate entity.
ये तो कुछ क्वेश्चन ही नहीं. If agricultural land purchased before purchase after becoming NRI, what is remedy?
Remedy is to
अभी
sell it immediately and go to RBI and go for the compounding. That is not permitted transaction. ऐसा होता है
Okay.
क्योंकि आरबीआई इज नॉट फेमा में तो नहीं मॉनिटरिंग अथॉरिटी, मालूम भी नहीं पड़ता है लेके एग्रीकल्चर 10-20 साल तक रख दिया तो इट इज द थिंग एनीवे है। एनी
Yes.
क्वेश्चन लेफ्ट नाउ?
सर दो चार क्वेश्चन और ले लेती
कर
हूँ
लीजिए
फिर बाद में
इज
बंद करती
क्वेश्चन ऑफ 5
हूँ.
मिनट्स। ओके
If a resident demat account having joint holding A and B, A is now a non-resident and B is resident. If resident demat account now needs to be converted to non-resident, what is the process?
यू हैव टू अप्रोच द डीमैट एजेंट, व्हाटएवर द चेंज इन स्टेटस यू जस्ट इंटीमेट डीमैट एजेंट एंड यू विल डू द नेक्स्ट वन।
If Karta of HUF become NRI, what is the status of HUF in India?
HUF remains HUF only. Karta will change. X की जगह Y हो जाएगा. If he leaves India, somebody else will be there in India में.
मतलब वो करता नहीं कंटिन्यू रहेगा ना सर? यदि वो एनआरआई हो गया तो करता चेंज करना पड़ेगा क्या?
या कंपलसरी नहीं है ऐसा. देयर इज नो एनी लॉ लाइक दैट, बट प्रैक्टिकली बरोबर है कि ही इज नॉट करता नाउ ना, ही इज नॉट डूइंग एनीथिंग फॉर द एचयूएफ.
बट उसके नाम से एचयूएफ कंटिन्यू रह सकेगी?
हाँ, नाम से रहेगा, उसमें क्या प्रॉब्लम है? उसका प्रॉपर्टी है, व्हाटएवर प्रॉपर्टी हैड एक्वायर्ड वो तो अभी ही कैन नॉट डिस्पोज ऑफ ना, यू विल हैव टू कंटिन्यू ना.
ओके, बट ही कैन बी बेनिफिट मतलब को-पार्टनर और मेंबर.
या ही कैन बी ए बेनिफिशियरी को-पार्टनर मेंबर,
बट ही कांट बी करता.
हाँ प्रैक्टिकली नहीं होना चाहिए. हाँ बोलिए.
Okay, each amount received from sale of inherited shares can be repatriated without limit.
Amount of inherited shares. Okay.
हाँ.
Okay. I have
सेल हुआ
it is
सर तो
received.
उसमें जो
Resident, it is a cess belonging to resident. Resident passed away. It is inherited to non-resident. Non-resident can
Yes.
take away the full amount.
So
So far
whether
as the inheritance
15,
is concerned, there is no limit. Any amount can be taken away.
so each 15 CACB required.
15 CACB may be required because when he is selling the shares and he taking out the full consideration, banker would like to know whether applicable tax has been paid or not.
And what is the position in case of if they sold the inherited property?
Then also he'll have to pay tax in India, and after paying tax, the legal heir who are non-resident, they can take away the full amount without any restriction.
And 15 CACB is required as per the, if it is more than 5 lakh or like
Right.
goods exported to NRI. Can NRI make payment from NRE account? Will it be considered as export sale?
Right, sure. Because it is a
Yes.
repatriable fund.
Can NRI get loan on based of foreign income for home loan in India?
Yeah. It is possible. Many banks gives loan for the home loan in India. That is possible.
Yes. That's why they are investing in India also. Now.
Yeah.
What happen if NRI does not change their local bank and demat account to NRE NRO?
Actually, this is a loophole. There is no any requirement under any of the notification circulars issued under FEMA. But practically, we advise that once your strategy change within some reasonable time limit, you should intimate the banker. Like I have seen many people who are non-resident earlier and now become resident for last 5 years. Still, they continue the same account. Nobody
And
is
so
going
they
to
are
question.
getting rent. So they are getting rent in their NRE account without TDS and without filing the return.
No, rent. See, if he declares as a non-resident, and rent is received from the resident, then resident will have deduct 30% tax. Okay.
Yeah, but
Rent.
they are not deducting. They are simply depositing the rent amount in NRE account
Yeah,
without deducting TDS.
No, I didn't get it. Who is the owner of the property? Non-resident or resident?
Resident, non-resident is the owner of the property. He
Property
gives
in
the
India.
property on rent. Yeah.
He gives to resident.
Yeah.
Okay.
And he has given his NRE account for depositing the rent amount in his account.
That is not allowed actually. He should deduct. Resident should deduct tax, applicable tax.
Most of the cases nowadays they are doing like that. They are giving their rupee account or NRE account to deposit the tax. So
But such amount will not go in NRE account. Banker will not accept unless banker is doesn't have any knowledge. Such amount cannot be deposited in NRO account. That will go to NRO account, not NRE account.
So, but how banker will know if I will do online transfer in NRE account for rent income, for rent payment. So how bank will know that? How will they will not allow me?
See, banker will not allow you to deposit anything in NRE account unless banker makes it sure that applicable tax has been paid. 15 CACB
And what about
is required.
NRO, sir? If I am
NRO, he
depositing
can
in
deposit.
NRO,
Yeah, he can deposit in NRO.
without deducting TDS, without deducting TDS.
See, legally, if you declare landlord is a non-resident, so resident will have to deduct TDS. That is a default under Income Tax Act. But he can deposit full amount in NRO account. That is allowed. There is no problem.
Can an OCI invest in National Pension Scheme?
Under repatriation basis. You discuss it in debt instrument.
Related to LLP versus company, in company director need to be shareholder. ये तो FEMA का question ही नहीं है. Indian company has received the consideration from foreign company after takeover in form of bank receipts and shares. In FCTRS, do we need to show the complete consideration or consideration in form of bank receipt only?
Need to understand the question properly. That is not a one line
Sir,
simple
इसमें ये है
question.
कि इंडियन कंपनी ने फॉरेन कंपनी से कंसिडरेशन लिया टेक ओवर में.
नहीं,
तो उसमें
इंडियन
बैंक
कंपनी
रिसीट्स
है.
भी
इंडियन कंपनी ने ट्रांसफर किया बिजनेस फॉरेन कंपनी को.
नहीं, फॉरेन कंपनी का टेक ओवर किया है.
Indian company took over the
नहीं
foreign
नहीं, फॉरेन
company.
कंपनी का टेक ओवर शायद इंडियन कंपनी ने किया है, तो इंडियन कंपनी हैज रिसीव्ड द कंसीडरेशन in
Indian
form of
company has
bank
received.
receipts, the consideration from foreign company after takeover in form of bank receipts and shares, rollover shares.
Hmm.
In FCTRS form, do we need to show the complete consideration or consideration in form of bank receipt only? मतलब उनका कहने का खाली बैंक रिसीट बतानी है कि rollover shares
नहीं
और
नहीं,
बैंक
सब
रिसीट का
पूरा
टोटल
दिखाना
अमाउंट
पड़ेगा
होगा।
ना, पूरा दिखाना पड़ेगा, वैल्यूएशन करना पड़ेगा, ऐसा थोड़ी होगा. Full consideration is to be declared in FCTRS.
Person holding Kenyan passport and Kenyan citizen starts business as proprietor. Any permission from RBI is necessary.
No, not at all.
Person is US citizen but tax resident as well as resident as per FEMA since residing in India and carrying out business. Such person want to subscribe to equity share of private limited company. Does this require compliance FCGPR?
No, not at all. It is a non-repetition based Schedule 4.
क्योंकि यूएस
It
सिटीजन है
don't
बट
mean
यदि वो यहाँ का ही रेसिडेंट है देन दिस इज नॉट रिक्वायर्ड ना सर.
citizenship is not important under
Yes.
FEMA. He is a resident of India. He has got Indian account and remittance. He is acquiring shares from the Indian bank account. Then it is on non-repetition basis.
Okay.
बाहर से पैसा नहीं आ रहा है ना, NRI में से नहीं आ रहा है ना, then it is a non-repatriable investment.
ये क्या बोल रहे हैं
और
सर, बस लास्ट इन्होंने एक ने वो दिया है NRI must any सर ये लोगों ने अपने अपने कमेंट दिए हुए थोड़े सर, एक दो मैं आपको बता देती हूँ. इन्होंने लिखा है कि bankers generally calls and checks about transaction for both NRO and NRE account. एक लिख रहे हैं any Hindu male can form HUF in India as per Hindu law. It is nowhere mentioned that resident Indian or non-resident. Then why can't form HUF in India?
under FEMA there is no such concept. Income tax, if it is permitted, they can go ahead.
NRI must intimate the bank of any change in their residential status as per FEMA rule. There are check and balance by the bank to ensure that remittance to NRI are only coming from another NRI account or from foreign bank. Sir, ये सारे questions हो गए अपने.
So, shall we close now?
Yeah, sir, just a second. We have to do some formalities.
Yeah.
So, sir, thank you. Thank you for your patience, hearing all the questions and giving the reply. So, you deserve a well-deserved vote of thanks from our side. So, I request CA Anita Raj to give a well-deserved vote of thanks to sir. Anita, please.
Yes, sir. Yes, ma'am. Ma'am, I would love to grab this opportunity to thank CA Narendra Madlani ji for sharing his in-depth knowledge, providing us with a broad perspective on such an interesting and a complex topic. The session was very, very interesting. Also, all the questions, they were answered with such minute details. Concepts like agricultural land, the NRE, the NRO accounts, etc. They have been explained so nicely by sir. We have all enjoyed the session and we thank you so much, sir, for your valuable time and imparting us with your enriched and valued experience. Thank you, sir.
Okay, welcome. Okay.
Thank you, sir. It was a nice session and basic concept was clear. कि यदि नॉन रिपेट्रिएट बेसिस पे है तो क्या करना है, पेट्रिएट बेसिस पे है तो क्या करना है, and what I am saying that you had understand the आपने हमें ना एकदम छोटे-छोटे बेसिक चीजें बताई कि नॉन रिपेट्रिएट बेसिस है तो क्या होगा, रिपेट्रिएट बेसिस है तो क्या होगा. And it is not to see the foreign citizenship or Indian citizenship. It is like resident. FEMA में citizenship का कुछ भी वो
you
नहीं
have to
है.
see only residential status, not citizenship. That concept was there in under FERA. In 1973 FERA, but from 2000 onwards, it is only residential status.
क्योंकि बहुत सारे क्वेश्चन सर उसी के ऊपर थे.
Yeah, all the participants are welcome. If they have any query, they can contact me or send me the mail. I will reply to the best of my. Okay.
Thank you, sir. Thank you, sir, for giving your time. and
Okay,
accept
bye.
our invitation. It
Okay,
was
thank
very nice and excellent session. And
Okay.
thank you all the participants for your patient hearing. And sir, अभी भी 175 लोग अभी भी जुड़े हुए हैं.
Oh, wow.
Yeah, sir, 250 से ऊपर थे आज के participants.
Okay. See, what I advise,
Thank you.
Pinky ji, what I
Yeah.
advise is, कि WRC should start a clinic, FEMA clinic. Every
Yes,
15
sir.
days, they can call. I have got many professional colleagues who are practicing FEMA. Okay. So you just gather the question over there and we'll call somebody over there every 15 days and reply the question of the members.
Oh, great.
Voluntarily,
Great, great.
without any professionalism. Okay.
Sir,
That
sure,
can be
sure,
done.
sure. I will. We will
Okay.
do that. That is a good suggestion, sir. We will do that.
Yeah. Okay.
Yeah, yeah. Thank you, sir. Thank you, sir.
Okay. Bye. Bye. Okay. Have a nice day. Okay.
Yeah. Miss
Okay.
Raji, you can close the session.